Hey everyone, and welcome back to the channel. Today we're going to be diving into a question that I've been getting a lot lately in my comments, in my DMs, and it's really all about Trump, with him back in the Oval Office. A lot of people are wondering, is the stock market headed for a crash? So to really get to the bottom of this, we're going to be going deep on a Reddit thread from Pure Stocks that's gotten a ton of buzz. It's titled, "Anyone else think the Trump market will end up crashing?" Yeah. The comments are a wild ride. But before we get into that, I just want to remind you to hit that subscribe button and smash the notification bell so you don't miss out on future deep dives. Okay, let's unpack this. So, one thing I noticed right away is that a lot of the comments are drawing parallels to Trump's first term back in 2018. Back then, those trade wars and his unpredictable statements really sent the market into a frenzy. I mean, remember the farmer bailout after those tariffs backfired? Some people are arguing that the only reason we didn't see a bigger crash back then was because of the strong economy pre-COVID. But this time around, things are different. We're already dealing with higher interest rates and inflation. And a lot of commenters are worried that some of Trump's policies, like tariffs and his stance on mass deportation, they're worried those could make things even worse. We could be looking at stagflation. Your prices keep rising, but the economy just stagnates. That's not exactly a recipe for a booming market. Right. And here's another thing that some commenters are pointing out, kind of a red flag. The S&P 500's price-to-earnings ratio, or PE ratio for short, it's way higher now than it was back in 2016. It's sitting at 31 compared to around 23 back then. Now, for those of you who aren't familiar with the PE ratio, it basically tells you how much investors are willing to pay for each dollar of a company's earnings. So a high PE ratio like we're seeing now, well, it can be a sign that the market is overvalued, meaning there's less room for growth and a greater risk of a correction or even a crash. Now, let's move on to something that's really got people speculating. Trump's embrace of crypto. A lot of people believe that he's going to announce a government Bitcoin reserve, which could send the price skyrocketing.
I mean, just imagine the impact if the U.S. government started holding billions, potentially trillions of dollars worth of Bitcoin. It would be a huge shift in the financial landscape. One commenter even laid out this whole scenario as kind of a conspiracy theory. But hey, that's Reddit for you, right? They're suggesting that Trump's allies, a lot of whom are big-time crypto investors, they might sell their Bitcoin to the government at inflated prices. And then after the inevitable dip that usually follows a massive surge, they buy it back at a discount. Talk about playing the system right. And to make things even more interesting, just a few days after his inauguration, a Trump-branded meme coin was launched. Some people see this as a sign that Trump is more focused on short-term market manipulation than long-term stability. I mean, what does a meme coin really represent in terms of real-world value? It's pure speculation now. Let's shift gears for a minute and talk about a historical pattern that several commenters brought up. It's a bit unsettling, to be honest. Republican presidencies, they tend to coincide with recessions. Some people think this is because of their economic policies,
like tax cuts for the wealthy and deregulation, which often have negative long-term consequences. Now, correlation doesn't equal causation, of course, but it's a pattern that's hard to ignore. So what's the main takeaway from all this Reddit chatter? Uncertainty, Trump's unpredictable nature and his policies. They create a lot of unknowns for the market. This could lead to wild swings, a prolonged period of stagnation, or even a full-blown correction. Now, I know this might sound all doom and gloom, but remember, volatility breeds opportunity. And there's one sector that tends to thrive during times of economic uncertainty: gold mining. When investors get nervous, they often turn to gold as a safe haven asset. And when demand for gold goes up, guess who benefits? Gold mining companies. Now, I've got my eye on a particular gold mining stock. That, I think, could be a big winner in this environment. It's called Name of Gold Mining Stock Ticker. They've got a solid track record, a strong management team, and they're committed to responsible mining practices. We'll dive deeper into the stock a little bit later, but for now, just keep it on your radar. So there you have it.
The Trump market is full of uncertainty and potential pitfalls. But there are also potential opportunities out there for savvy investors who know where to look. Welcome back, everybody. So let's kind of dig a little deeper into some of the key arguments that are swirling around this whole Trump market crash thing. One thing that really stood out to me in that Reddit thread was the S&P 500's PE ratio, that price to earnings ratio. It's sitting at 31 right now, which is significantly higher than it was back in 2016 when Trump first took office. It was like 23 back then. And just a quick reminder for those of you who need it, the PE ratio is basically a way to measure how much investors are willing to pay for each dollar of a company's earnings. So when you see a high PE ratio like we're seeing right now, it could mean that the market is overvalued. There might not be as much room for growth. and the risk of a downturn is higher. You can kind of think of it like a rubber band that's been stretched too far. Eventually, something has to give. The question is, what's going to be the catalyst that causes it to snap back? Another concern that I kept seeing in that Reddit thread was the whole trade war thing, Remember back in 2018 when Trump was slapping tariffs on everything? The markets were all over the place. Businesses were struggling to keep up. And there's a real fear that he might go down that road again, which could mean higher prices for consumers, supply chain disruptions, maybe even a global trade war. Nobody wins in that scenario. Then there's the whole issue of mass deportations. And look, I know this is a touchy subject, and I don't want to get into a political debate here, but from an economic perspective, some people are worried that removing millions of people from the workforce, it could have some serious consequences. Like, think about industries that rely heavily on immigrant labor, like agriculture or construction. If there's suddenly a shortage of workers, wages could go way up, leading to inflation. And if businesses can't find enough people to work, they might have to cut back on production or raise prices even more, which could trigger a recession. But what's really interesting, and maybe a little bit scary, is that every single Republican administration in the last century has seen at least one recession start during their time in office. I mean, correlation doesn't necessarily equal causation, but that's a pretty hard pattern to ignore. And when you look at some of the policies that Trump has supported in the past, things like tax cuts, deregulation, protectionism, well, those things might seem good in the short term, but they have a history of contributing to economic instability down the road. So what can we do with all this information? Well, the first thing is don't panic. Remember, investing is a marathon, not a sprint. We just got to stay informed, diversify our portfolios, and try not to make any impulsive decisions based on fear. Remember how I said that volatility can create opportunity? Well, one sector that often does well during uncertain times is gold mining. Gold is considered a safe haven asset, meaning that investors tend to flock to it when the market is looking shaky, and that can drive up the price of gold, which is great news for gold mining companies. Remember that gold mining stock I mentioned? Name of gold mining stock ticker. I think it could be a really good play in this environment. They've got a great track record, a really strong management team, and they're committed to responsible mining practices. But look, I'm not just throwing out a stock pick and telling you to blindly follow my lead. Do your own research. Dig into their financials. Understand the risks involved. Investing is a personal journey, and what works for one person might not work for another. Now, before we move on, I want to talk about something that's been getting a lot of attention lately. Cryptocurrency, specifically Bitcoin. Trump's been dropping some hints about potentially creating a government Bitcoin reserve. And the crypto world is buzzing about it. Just imagine. The U.S. government holding billions, maybe even trillions of dollars worth of Bitcoin. It could be a game changer. It might even legitimize Bitcoin as a global reserve currency. Now, some people are convinced that this would send the price of Bitcoin through the roof. And it might. But there are some serious risks to consider as well. Like, what happens if the government decides to sell off a big chunk of its Bitcoin holdings? Or what if there's a major hack or a regulatory crackdown? Investing in crypto is already a wild ride.
And government involvement could make things even more volatile. And remember that scenario I talked about earlier? The one where Trump's buddies sell their Bitcoin to the government at crazy prices and then buy it back after it drops. Well, that's not the only thing that's raising eyebrows. A few days after Trump's inauguration, a Trump-branded meme coin was launched, which has some people worried about market manipulation. And a focus on short-term gains over long-term stability. It's all part of this bigger trend of financialization, where everything seems to be about making a quick buck. Regardless of the consequences, think about it. We got meme stocks, meme coins, NFTs, and SPACs. It's all about speculation and hype, often detached from any real-world value. And that can create bubbles, which, as we know from history, always burst eventually. Now, I'm not saying that you shouldn't invest in any of these things. If you believe in a particular project or asset, go for it. But it's so important to be aware of the risks. Do your research. And most importantly, diversify your portfolio. Don't put all your eggs in one basket, especially in these uncertain times. All right, welcome back to the channel.
So we've talked a lot about the Trump market and the potential for a crash. We've looked at, the volatility from 2018, the impact of Trump's policies, all that crypto stuff, and those historical patterns that are making people nervous. So now I want to talk about what you can actually do about it. What are some strategies to protect your portfolio in these uncertain times? First things first, don't panic. Seriously. Making impulsive decisions based on fear is like the worst thing you can do when it comes to investing. So take a deep breath. Think about your risk tolerance, how much risk are you comfortable with? And then go back and look at your investment goals. Are you in it for the long haul, or are you trying to make a quick buck? Once you've got that figured out, you can start to make a plan. One thing that's always a good idea is diversification. You know that old saying, don't put all your eggs in one basket? Well, it's true for investing too. You want to spread your investments across different asset classes, different sectors, different geographic regions. That way, if one area of the market takes a hit, your whole portfolio won't go down with it. It's like building a financial safety net. Another thing to think about is rebalancing your portfolio. This means basically taking some of your profits from your winners and reinvesting them in areas that haven't done as well. This helps you keep your asset allocation in check, making sure that you're not overexposed to any one particular sector. And of course, always do your own research. Don't just blindly follow the hype or listen to what some random guy on YouTube is telling you to do. Read financial news. Dig into company reports. Talk to a financial advisor if you need to. The more you know, the better equipped you'll be to make smart investment decisions. Okay, so let's get back to that gold mining stock I've been talking about. Name of gold mining stock tickers. I really think this company has the potential to do well in this market. Whether we see a full-blown crash or just, a long period of uncertainty, gold is often seen as a safe haven asset, which means that when investors get nervous, they tend to buy more gold, and that drives up the price, which is good news for gold mining companies because they can sell their gold at a higher price, which boosts their profits and could potentially lead to their stock price going up. Now, name a gold mining stock ticker isn't the only gold mining company out there, but I like them because they have a solid track record, a really experienced management team, and they're committed to responsible mining practices. They've consistently delivered good returns for their shareholders, and I think they're in a good position to handle whatever challenges might come their way. But here's the thing. This is just my opinion. I'm not a financial advisor. This is not personalized investment advice. So please do your own research. Look at their financials, read some analyst reports, and then make an informed decision based on your own investment goals and your risk tolerance. Investing in the stock market can be a wild ride, especially when there's so much political and economic uncertainty. But it's important to remember that it's a marathon, not a sprint. So stay informed, diversify your portfolio, and don't let fear make your decisions for you. All right, that wraps up our deep dive into the Trump market and the potential for a crash. If you found this helpful, be sure to hit that subscribe button, smash the like button, and leave a comment down below. As always, happy investing.